This is Don DeBartolo, a senior commodities broker and market strategist with Daniels Trading in Chicago. I'm also the trader behind the Trade Spotlight advisory service. Trade Spotlight is a recommendation-based service that covers the commodity futures, commodity options, and future spreads. And this is Beyond the Spotlight, a video series that spotlights 2 or 3 markets that may become trading opportunities for the week ahead. The week begins with Monday, November 11th, 2019 for this video. Before we jump into the charts, please pause the video and read the disclosures so that you understand the risks involved with futures and commodity options trading. This is a snapshot of what the Trade Spotlight advisory service looks like. This is the futures segment. You will know what segment it is in the top left-hand corner. You'll get a write-up on the trade, so you have the details of the trade setup in the breakout, the precise entry order, any important information such as margin, open interest, last trading days, expiration days. You'll get your stop and target orders for futures, future spreads, for commodity options, the risk-reward parameters, and a chart so you can get a look at the trade setup. Okay, let's jump into our first chart. This is the March 2020 copper contract. And first thing is I drew off a lower trend line here. I believe this level can act as a support level. I'm looking for the market to trade down into this level here and then see if that holds. If not, if there's a breakout of this trend line, that can potentially set up a trade to the downside. Why? Because the trend is down. This is the MACD indicator. And the stochastics is hooked down as well. This is a momentum indicator. So potentially a close below this lower trend line can see the market get to this 50% Fibonacci retracement of this rally, which is also a 50-day moving average that comes in at 263.58. That's right here. So potential downside target would be down here at the support level near the 256 even price level, or you could even come down to these lows here. This low right there at the bottom of that trend line is 252.60 from October 1st. You also have the 12-month contract low at 249.20 from September 3rd. Potential stop losses could go above this pivot point high. That high from Thursday, the 7th of November, is 273.85. That is a lot of risk in copper. Perhaps I turn to the options marketplace to trade copper, though copper options are a little thin. Could also look at a future spread potentially to trade this opportunity to the downside. Back down to, again, this is the initial area for a target, and then further down to the 256, maybe even 250 level. So, we'll look at puts down in that level as well. Okay, this is the March 2020 Chicago wheat chart. And what I have set up here is a potential 1-2-3 formation, the 1-2-3 bottom formation, which is a trend reversal formation. This is the number 1 point, which is the 12-month contract low, 457 and 3/4. The number 2 point comes all the way up here near the 540 price level. That's 539 1/4 from October 21st. So I'm looking for a sell-off in this market. However, there's a lot of support here. You can see a 200-day moving average that comes in at 511. You have a 50-day moving average that's 503. There's also a bunch of highs in here and some lows down in here as well. The 50% Fibonacci retracement of this rally puts you about the $5 price level. So the market may just get down to there. The MACD is showing a downtrend, and there's strong momentum to the downside. So not looking to buy this contract just yet, even though it's bouncing off this lower trend line. Would actually like to see the market get into this $5 price level, this potential support level here. Set up that number 2 point, and then look for a hook back up, maybe using that fish hook pattern to get back into this market to the upside. First target could be this 540 price level, this number 2 point. Right now, the 20-day moving average is angled down. We'd like to see that hook up as well. So going to be patient on this one. This one may not set up for a few days or later this week, but keep your eyes out for the March 2020 Chicago wheat setting up a potential long entry. Okay, and our last chart today is the February 2020 live cattle chart. And if you remember a couple weeks ago, we looked at an opportunity of potentially selling the live cattle contract. That was the December contract. That was when the market was up near this resistance level, was looking to sell it on a breakout. That never occurred, so that order was canceled, no fill. Market continued higher here, which sets up potentially a double top formation with these two session highs. You've got the 12-month contract high. That is from April 18th at 126.30 was that high. And then this recent high was from the 8th of November, 125.40. So not quite near the 12-month contract high, but potentially close enough here to set up that double top. So we're looking for a reversal. You can see how parabolic this market has. You can run a trend line up here on either side. And a 50% Fibonacci retracement of the sell-off brings it down to 115.22.5. That's a good 10 points from where the market's trading. You've got all your moving averages pointed up though, right? Because this market has been parabolic. The 20, 50-day, and the 200. But look here, your MACD is showing a potential hook to the downside in the trend. And then the momentum, the stochastics indicator, is in the overbought level and ready to break out to the downside. So again, this could be an opportunity that's best suited for options. Put options down in this area, the target levels, or future spread. Just because of the volatility here, how parabolic this market has been. But this one could happen very soon, so keep your eyes open for the February 2020 live cattle setup and trade recommendation. If it does indeed, get ready to break out to the downside. Here's all my contact information. Again, I am the publisher of the Trade Spotlight Advisory, the trader behind it. You can reach me directly at this number or on the cell phone or toll free, or feel free to email at tradespotlight@danielstrading.com. If you're not a subscriber to the Trade Spotlight, it's a free resource provided to clients of Daniel's Trading, clients of myself. But you can get a free trial, so you can test it out and decide if you want to work with me, work with us here at Daniel's Trading. Just go to the Daniel's Trading webpage, click on the Advisories tab at the top, and under Technical Indicators, you'll find Trade Spotlight, where you can learn more. You can see previous posts, and you can subscribe for free for 90 days. I think that's enough time to take a look at what I'm doing. And thank you for listening to this video this morning. Happy trading.